Hi everyone, a very good afternoon. You're watching the newsroom on ET now. I'm Mubina Kapasi. The uptick continues for the equity markets, though mind you, we have slipped a tad bit off the day's high, which was 11,930. We're just a couple of points lower than that level. Sensex as well, just a little below 40,400. The RBI monetary policy, of course, is the cynosure of all eyes, the announcements that have come by, and take a look at some of the housing finance companies reacting to that. So a stock like Repco Home Finance and LIC Housing Finance, who we just spoke to, moments ago as well, are all buzzing in trade. Massive momentum being witnessed in these stocks. Risk-weighted, provisioning, the caps on the same have essentially been lifted. So that is something that is causing all of these stocks to, perhaps rally in trade. Repco, in fact, was seeing momentum even yesterday. Today, it's another 8.8% higher in trade. So great gains are being witnessed over there. And banking in general seems to be on a firm footing. So on the Nifty 50, take a look at an ICICI Bank. It's gaining a nice 3% in trade. Today it seems to be largely leading the gains on the equity markets. So great going for an ICICI Bank. The Nifty Bank in itself is actually up almost 7% this week. So it's one of the best trading weeks that we've seen for the Nifty Bank since the 30th of since the week ended 30th of August. Apart from that, let's take a look at what are the other big movers and shakers, and I want to focus in on the broader markets. Interestingly, we are seeing some red on the screen for Magma Fincorp. It is an NBFC, but today it's down by roughly about 5.3%. The other big losers are also Grasim Industries, which is losing roughly 3.4%. HDFC Life Insurance as well is losing more than 2.2%. The consumption names as well are taking a bit of a backseat. But I think all in all, you've got to give it to the equity markets for posting a very, very nice rally so far this week. We may just end the day above the 11,900 mark. Sensex, of course, is firmly above 40,000. Well, stocks in news, and more stocks in news rather. We spoke to 5paisa.com earlier in the day to talk about their Q2 numbers. Listen in to Prakash Gagdani on what he had to say.
The start of this financial year, it was a turnaround in terms of the retail participation in capital market is concerned, and we saw a huge inflow of new people who are coming to capital markets for the first time trading. And because we are completely a digital player, an app-based broking company, it is very easy for people to come on board on our platform and trade. And that's the reason we are seeing a huge improvement in our customer acquisition. If you see the Q1 as compared to Q2, even in Q2, we have grown our customer base by almost 53% as compared to Q1. And that has predominantly resulted into a revenue growth sequentially of around 23% and annually year on year around 125%. It has also helped us because we've always been focusing on reducing the cost and improving the efficiency, and that has actually also helped us to bring profits for the second consecutive quarter, and showing a growth of profits of almost at a PBT level around 50% as sequentially.
Okay, well, moving on in our What's the Story segment, we are going to be focusing on a stock, or rather on a company that was once, in fact, classified as a penny stock, with its shares trading at just 2 to 3 rupees per share, to have now emerged from the ashes like a phoenix of sorts and rallied to almost 300 rupees per share. The stock I'm talking about is Tanla Solutions. This year itself, it has rallied from just 50 odd rupees per share to close to 280 rupees per share. It is into cloud communications, provides messaging solutions, voice and IoT as well, but messaging is the mainstay. What I basically mean by that is that if you say you conduct a net banking transaction or you purchase something online, you get an OTP on your mobile phone. This OTP essentially is managed. This entire messaging of OTP is managed by Tanla Solutions, and some of their key clientele are your big telecom companies like VI or Bharti Airtel. But interestingly, they are also foraying now into other businesses. They have purchased, or rather they forayed into mobile advertising through an acquisition that they recently made. And on account of that, you're seeing a nice uptick in revenues coming by in the last couple of quarters. Margin profile as well has improved. It's a very interesting business because we know in India mobile penetration is low, so there's a lot of scope for growth as well coming in over there. But additionally, want to talk about that hiccup that the company faced in 2008. Back then, Nokia was one of its biggest clients. It had a huge revenue exposure, to Nokia. And of course, when Nokia's business started fumbling, went down under, Tanla as well suffered. But since then, like I mentioned, it's risen from the ashes like a phoenix. The management as well did change, and now the stock price is doing extremely well. The business has turned around. It's a 4,000 odd crore rupee company as well, 3,000, pardon me, odd crore rupee company as well in terms of market capitalization. So that as well is something noteworthy. And I guess the big vote of confidence also comes in from the fact that the promoter has been upping their stake. They conducted a buyback as well recently. So like I mentioned, that too would be a great vote of confidence. Okay, we'll do one thing. We'll take a very short break right here on the show. Don't go anywhere. Welcome back. You're watching the newsroom on ET now. The big stock in focus is Vedanta. The delisting process is, of course, currently underway. In fact, today is the last date for shareholders as well to bid in and tender in their shares for the purpose of delisting. It's my honor to introduce now on the show Mr. Anil Agarwal, the chairman of Vedanta Limited. Mr. Agarwal, many thanks for joining us today on ET Now. So the last update that I see on the exchanges is roughly 126 crore shares that have been bid in, some of them at really exorbitant prices. You have to reach that number of 134 crore rupees. We just have the last couple of hours left. How are you looking at how the delisting is proceeding, the price points as well at which some of these institutional investors have been bidding in at?
Yeah, phenomenal response and very, very good momentum. And because the computer is down, last we saw was 92, 93%, but I don't know what exactly is going on. So, but SNI, institutional, everybody tendered the shares. And once we see it is amazing what SEBI has done. I calculate the SEBI, the process which they have, the reverse book building, it is probably being followed by other countries also, whereby 100% say is of the shareholder. And what they want to put the price, they can put in. And then if it is within that range, we can accept it or can give a counter offer. So this is the process going on. It's very transparent process, except today is very unfortunate that the computers are down, people can't see the screen. So it may be some jittery, but seems to be very good. It's a very, very good response. Yeah.
Well, yes, you're right in that. We are having some glitches over there, but I just have managed to get an update. It's 129 crore shares, Mr. Agarwal. I think just about 5 odd crore shares to go. But the question, of course, if you do get the required numbers as well, the question, of course, is with respect to what's going to be the pricing, the final RBB price, the reverse book building price. And everyone's been asking that what's going to be the figure that Mr. Agarwal will be comfortable with. There have been all kinds of numbers floating around in the market. I'm sure you as well are aware of that. And I'm sure you have a certain figure in your mind too. So if you could share that with our viewers.
No, it is, if you see the price range and you know how much loan we have taken, so everybody has their calculation. You have seen the market price today, 114 rupees. It is a great time for people to surrender the share. It will be much better than this price. So we can't put in the price exactly, but it has to be in the range where we can cover 134 crore shares, and it has to come to that range. And that range is whatever we have taken a loan from the bank, and that will be converted into the price. Around that price should be. But let's see one thing at a time.
Okay.
Let's do
Mr.
one thing
Agarwal,
at a time.
if I'm not
There is
mistaken...
no point talking about
Yeah.
price. We are very generous, but let's complete the process where we have to decide whether we have enough share to complete the delisting today, or do we have to give a counter offer?
Well, yes, that will of course be step one, to check in on how many shares are being bid in. But you still have a couple of hours. But Mr. Agarwal, I'm sure you've kept an amount in mind. And I think you've raised around $3.1 billion via the bond sale, via some short-term loans as well. So how flexible are you as well on that amount? I mean, if I'm not mistaken, the loan as well can be enhanced a little bit. So you as well must be having a budget in your mind that this is the amount that you want to spend on the delisting.
Everybody knows the number. There is no point me to talk to you and spell out the number. These numbers are well known, and everybody knows 5 rupees plus and minus. That is going to be the price. But at the moment, let's focus about completing the delisting process and to understand whether within this delisting take place, or do we have to give a counter offer? That has to be determined, and that should be determined by this evening. Everybody knows this is the loan we have taken, 5 rupees plus minus. That's the price range.
So at what level do you believe you may want to give a counter offer then? Let's put it that way, Mr. Agarwal.
No, but let's not talk today unless we know that delisting, we have enough shares, or do we have to go for the counter offer? Let's wait for a few more hours, no? That's why I say the ET, I should do the interview at the last, because Nukunj, you all are very provoking and they are very intelligent, and then we'll decide the strategy. At this point of time, there is no point talking about that unless the delisting or counter offer we decide. Or we are not in position to decide. The biggest thing is what SEBI has done very friendly, because India is opening up. India has a tremendous potential. This sends a signal because SEBI is, everybody's become comfortable that you can list the company, you can delist the company, and there will be nobody in between. So it will be a transparent process. This is a process, and SEBI has done 1 or 2 cases has happened, and it will be in the practice. So more and more business can come in.
Oh, absolutely. And I agree with your point, giving it to the shareholders to determine what they believe would be a fair price. Mr. Agarwal, what would be plan B? Let's assume that in case if this delisting cannot go through for whatever reason.
There is no question of talking about that, because it is all evident that is going. But there is we have to do this because of the structure was not right. To make a simplification of the structure, we have to do this because there was a lot of leakage in the system, and once we do it, we will have enough money. There's a lot of debt there's a good amount of debt in the company, almost 1,20,000 crore after we do this. So to service that debt is important to simplify the structure. That's what we have done. We have done to delisting. We want to be very fair to the shareholders, and if you see that when the prices were 62, 63, we had from there 80 rupees to 80% price has increased. Even the market is 114 today, 113. Our average, the people are showing 140 to 60. 140 to 60 is the people are tendering the share. So this is the range people are showing. So it is much more than what the market price is. And we will be positive to make sure that we do the justification. And it is a great time for the Vedanta shareholder. Cash is the king. To have cash, to look at the cash, this kind of cash to get. There's a lot of other opportunity. This is a good time nobody's paying cash. Everybody's taking the cash. So this is a time to take the cash or probably look at other investment opportunities.
Okay, Mr. Agarwal, just a question. Is there any chance you are considering perhaps approaching SEBI to extend the delisting period? Because again, there was certain rumors going around, so we just thought it best to get it clarified from you.
Yeah, it is shareholder because computers are half the time computers are down. You don't know, there is a mistake whether 5,000 shares, 5 crore shares are plus and minus. So everything was confusion. SEBI is very friendly to make sure process is transparent. They don't lose anything in the interest of the shareholder if they have to extend one more day. So the clarity can come. People are more comfortable. People can make up their mind to sort out. And if it is required, SEBI will be more than willing, I believe, because they want this process to continue and to extend.
But for now, Mr. Agarwal, you've not yet approached SEBI, am I right?
So,
as we speak...
Yeah, go ahead.
Okay, all right. So for now, then we can just assume that today still continues to be the last day for shareholders to tender in their shares.
Absolutely.
Okay, Mr. Agarwal, the fact that you are going ahead and doing this delisting, willing to buy the shares owned by the public shareholders, I think that in itself is a stamp of confidence that you have on India's growth story, on the commodity cycle as well turning. Am I right?
I love India. I'm a fan of India. I'm son of the soil, and I believe that this is the best country in the world, and so much of opportunity.
Okay. All right. Well, Mr. Agarwal, in that case, we hope that we can chat with you once again post this delisting ends. Know your final decision as well. Like you've mentioned, it bears a lot on finally how many shares are tendered in, at what price, etc. And I'll be sure to reconnect with you then once again to get an update from you, whether you'll be going for a counter offer or how will it go. So, Mr. Agarwal, thank you so much for joining us today. And we wish you all the very best for this entire delisting process.
Yeah, I promise you we'll have a very comfortable chat whenever you want, Mobina. Let's this process one at a time. Let this get over, then we talk the broader picture. Thank you, Mobina.
Okay, thank you so much, Mr. Agarwal. That was Anil Agarwal, the chairman of Vedanta, giving us an update. Well, just like I guess a lot of you out there, he himself is also facing some glitches over there on the technical aspect. But from what I see last, still this is only at about 1:35 p.m. The number of shares bidden is a little under 130 crore. He still needs about 4 to 5 odd crore shares to be bid in. For now, one can say that today still is the last day. Not exactly confirming the rumors that have been abuzz in the mills that perhaps they may consider extending the delisting. But for now, yes, the last couple of hours left, 129 crore shares have been bid in. Some of them are at extremely exorbitant amounts. So I think it will be crucial now to watch that finally where does the needle land just about, I guess, a couple of hours from now. Okay, let's move on from Vedanta now and bring on board, or rather share with you an excerpt of an exclusive conversation we had with Mr. Pawan Goenka. Take a look.
That I see, everything that I read or any informal talk that I have tells me that there will not be a flurry of discounts this festive season. It will be about what you see every festive season because of the demand being structurally there, it appears, and also because supplies are limited. In fact, when you ask me what will be the kind of growth, my view even now is that it will not be determined so much by demand. It will be determined more by supply. And supply, as you know, has been a constraint for the industry for last several months. We have been talking about that as our main constraint. But even that is improving significantly. From the month of August to September, there was a very big improvement in supply consistency. In September to October, I expect to get similar improvement. And I would think that by end of October, we should be more or less normal in terms of supply. All the concerns that we had about migrant labor not coming back, about working capital not being available for tier 2, tier 3 supplier, all of that has been taken care of. It's partly by government action, partly by action of the industry players themselves. But all of that has been taken care of, and it's a good sign that migrant labor also is back. I think that was one of the big concerns that everybody had, that will the migrant labor come back? They've come back. Yes, there was a problem because very often the labor that went didn't come back. It sort of got redistributed, and therefore many of the tier 2, tier 3 suppliers especially had to retrain, reskill the workers that came back. But numbers are there, and by end of this month, I think we'll be back to pretty much good level of resourcing at all the factories with proper skill training and skill development being.
Times Network Special Investor Education Series Nivesh Ke Fande will share important tips on how to better manage your financial portfolio and also guide you by shedding more light on some important aspects of personal finance planning. On this edition, we are looking in at debt funds as a part of your personal finance portfolio. Take a look.
Today on Nivesh Ke Fande, I want to talk to you about debt mutual funds.
Yes, Mubina, most people do incorrectly believe that mutual funds invest only in equity markets or shares, as they are popularly called. But that's not true.
You're right. Debt mutual funds invest in government bonds as well as other debt securities.
And while equity mutual funds are considered to be a risky investment, some people also consider debt funds to be risky as well.
Well, actually, nothing in life is without a little risk, right? I mean, not investing your money at all is also a risk, as then your money does not grow at all.
So true. Debt funds do carry some amount of risk, but not all funds carry the same level of risk. All debt funds do carry lesser risk than equity mutual funds, but it all depends on what the debt fund that you pick is investing in.
Well, as they say, risk and return are directly correlated. So it's important to assess your risk appetite when choosing a mutual fund that suits you best.
That's all on this edition of Nivesh Ke Fande. Stay tuned for more insights on investing on the Times Network.
Okay, well, with that, we'll wrap it up on the show. Many thanks for watching.